Welcome to Serenity Wealth Now with Chris Cooper. This is not your typical financial radio show. As a licensed CPA, insurance agent, and investment advisory representative, Chris coaches his clients on a holistic view of financial well-being with an objective of providing a complete financial strategy to fund life's goals. Chris is here to guide you down the path to the financial serenity you deserve. Now, here's Chris Cooper.
All right, good morning. What is going on? It is Sunday morning before tax deadline. And I know there are some listeners out there that are just going, panicking, trying to figure out how to do some last minute filing. But take a little break and transition more to a forward-thinking tax philosophy, forward-thinking tax process. And to help us do that, I've got special guest in here, Director of Budgeting, Fiscal Policy, Elias Tsapelas with the Show Me Institute. How are you?
Very well. Thanks for having me.
Good. Well, thank you so much for coming in. Now, tell me, you've got your taxes done, right?
Of course. And I already got my refund. So
already got your refund and everything.
Yes.
See, that's how it's done, right? It was a simple process.
Very simple, at least for me.
Yeah.
Not for everyone. And the refund's a little bit better than years past. So
there you go.
Nice.
Yeah. Well, that's because you had tax planning on your side probably too.
Of course.
Well, right? So now, were you able to e-file? I was not able to e-file, which drove me insane.
I always e-file.
Yeah, I try to. I had a few little nuances. Self-employed, so I had the little 1095A, and for some reason, the H&R Block software said, no, you can't e-file, which is kind of frustrating. But
the issue that I always, different friends or whoever ask me about different tax things because they're not ready to go to, full planning.
Yeah.
But, just various questions. And normally the health savings account is what throws off HSA.
Oh, yeah, HSA. Yeah. And I love that one too. That's a great deduction. I've got marketplace insurance, which hosed me up, which is frustrating. It shouldn't have. It is what it is. But now I get to manually file, which is fine because I owed them money anyway. Because I'm a big believer in I don't want to let them borrow my money all year long, if that makes sense.
Hey, I am fully in that camp.
Yeah. But I hate owing them at the same point in time, but I don't like the penalty. So
yeah,
that's where it is. So, but I ask this question a lot. I'm going to ask it to you too. Have you ever met a single person who likes paying taxes?
Not a single one.
Yeah. Have you ever met somebody who thinks they're paying more than their fair share, or they would like to pay more in taxes?
They would like to pay more?
Yeah.
No, I've met people that think other people should pay more.
There you go. Yeah, but then you ask that person, no one agrees that, I don't pay enough in taxes.
Exactly.
So somebody's got to pay for taxes. Somebody's got to fund our government, right?
Yeah, as long as it's someone else.
That's right. That's always the answer. And it's kind of frustrating. So one of the things that we talk about all the time is you can always prepare your taxes, right? This is a great time. We're thinking about it in April, preparing our taxes, finalizing returns. Really, 2025 already happened, right? It closed on December 31st. There's not much you can do after that. There are some things, of course, but your opportunities are limited. I like to think more forward-looking, right? 2026, 2027, even beyond that, about how your taxes look long-term. And so one of the things that the Show Me Institute does a lot of is think about free markets and how they are impacted and influenced by tax policy. So a lot is going on in the state of Missouri right now. So talk to us a little bit about some of the key changes that we hear about, and then we'll get into a little bit more depth into those as well.
Sure. So this year has been kind of an exciting one, at least in Jefferson City, because our state elected officials are finally having a bigger discussion, I would say, of what should Missouri's tax policy be?
Yeah.
What should we be doing? And that's not just what taxes do we have or what our rates are. I mean, that is a big part of it. But an even bigger part of it is, how much money is the government raising and how are we spending things? Who are we, giving carve outs to, different benefits? What really should the government be doing? Because really all these things are connected. And so.
Right. So it's budget management, fiscal policy, right?
Exactly.
It's the expense line. We always talk about revenue line being the tax line, but you also have to manage the expenses.
Yeah. And when you look at what the state government has done, just going back to 2019, our state budget is about twice what it was then. So, so the state has been spending a lot more money, and it's been an interesting period because state tax policies changed some, but there was a lot of money from the federal government that came in, and a lot of that is kind of drying up, and the state's sort of figuring out, what should the level of government services be?
Mhm.
Should we continue some of the exemptions or different spending programs, different, all kinds of different things. And then what does that translate to? And so the governor said back in January for his State of the State that Missouri is going to get rid of or start the path to getting rid of its state income tax, which right now that's about 60% of the state's revenue. So it's an enormous portion. It's the state's biggest tax. And so if you really start talking about changing that, I mean, that opens the doors to looking at everything.
Right. Now, and it's not something that can just happen overnight either, right? When we're having, these are conversations that are taking place, but this is not something that's going to affect us in 2026.
No, not right now. So Missouri's actually been kind of on a path for getting at least a lower income tax for about a decade. So going back to, I think it was 2014, Missouri had a 6% income tax rate. Now we're down to 4.7.
Yeah.
And if the state meets some different economic benchmarks, we can go down to 4.5%. But what we're talking about is getting from 4.5 to 0 and how fast that would be and what it means for funding other government services, what type of taxes we'd need to get there. And really, what is Missouri's spending growth going to look like over that period? Are we talking about continuing this rapid trend of increasing there? Or are we talking about, kind of tightening the belt and looking at other things? And so there's a lot of different ways to get there, but I think right now the discussion is a little bit longer course for getting rid of the income tax.
Which is not necessarily a bad thing, because you want to do it in a good, intelligent, thoughtful way, right? Because otherwise it's just not going to have a sustainable power.
Yeah, that's what you saw with Kansas. Whenever in Missouri you talk about getting rid of the income tax, everyone, or you always hear, look at Kansas. Back a decade ago, Kansas had a hard time trying to get rid of their income tax, but they did an enormous cut very fast. They created a tax loophole. They didn't cut any spending. So and of course, there's always, when we're talking about this stuff, there's always other economic things happening. None of this is happening in a vacuum. And so they had just a tremendously difficult time over there. And people think that's what is being considered in Missouri. Not even talking about this specific plan, but what is being debated this year. But almost everything that I've heard, or what Missouri has been, the path we've been on is, maybe lowering the state income tax rate by 0.1% a year, or, potentially more. But normally, at least what Missouri has been doing is something they call revenue triggers, where we basically wait and see how much money we have at the end of the year and see if that can go back towards lowering the rate in future years.
So kind of looking at it based on a surplus type of a level.
Yes.
Right. Which is a much more strategic long-term thinking that gives you the ability to have it be sustainable, right?
Yeah, making sure you have the money, because the government can go back and look at who all filed their taxes, how much money came in, and what, based on how much revenue came in, how much could the rate be lowered, how much that would cost and what it would do. So if we have a surplus, just say for example of $200 million, say that translates to 0.1%, the government can look at that and figure that out just going forward. And of course, there's also economic growth and inflation and all those type of things. So being sure you have the money in the bank before you try something is a much more secure way of going forward, and something that makes sure it'll be a little more sustainable.
Sure. Now, before we start going into the whole tax thing here, let's spend a little bit of time on setting the stage with one of the things you mentioned. It's really, really hard to talk about the top line, the revenue line of a company without understanding your spending habits. And I talk about this with individuals, small business owners all the time, right? It's great to understand your revenue growth, where you are, what your income streams look like, but your income stream and what you need in retirement is, even for an income stream, is very dependent upon where you are on expenses. And that's true of any organization, whether you're an individual, company, or quite frankly, a state government, even a federal government, right? So if you think about expense management from you guys' perspective, what are your thought processes on the expenses that Missouri should really be involved in? Because I know you mentioned that we've doubled our budget over the course of the last decade. That's quite significant.
Yeah. Well, the big thing, at least in Missouri, is kind of looking at the balance of what are our mandatory spending requirements and what are discretionary, and really keeping those things separate. So Missouri has a very large Medicaid program, so healthcare for low-income individuals. There is about 1 in 5 Missourians are on the program now, so pretty large. And another big portion of Missouri's budget goes towards K through 12 education. Those are things that are mandatory now. Medicaid is in Missouri's constitution. But when it comes to a lot of other things that are discretionary, those kind of get into the discussion of, hey, maybe revenues aren't as good this year. Let's see what we can possibly, deal with here. And a lot of times when you're talking about cutting a budget, it's a lot easier said than done.
Of course.
To many people, something that is discretionary to them feels pretty mandatory because the government, if, the government isn't just spending 50 some billion dollars a year and going nowhere. Those are dollars that are going to Missouri businesses and all kinds of things. So it's a much bigger discussion there. But really what you see with government is that it's slowly been not just increasing in size, but increasing in scope.
Mm-hmm.
And then, as costs go up after year, or you expand the services that are being offered, it just becomes more and more difficult to manage. And that kind of flips it back over to looking at the revenue side to see, what is Missouri going to have to do for its various taxes to pay for those type of things? Or should we be right sizing the spending before things get out of hand? And at least right now, it seems like at least in my opinion, it seems like Missouri has kind of let the spending get a little out of control. And now we're kind of trying to look at that. And that is part of the big discussion of tax policy, kind of shining a light back on what Missouri's real priorities are.
Yeah, which you've got to prioritize expenses. Now, we always hear about balancing budgets, right? More so at a federal level. At the state level, what does our budget look like?
Missouri's constitution does require a balanced budget, but what happened in recent years, and part of how Missouri's budget has doubled, was there was so much money coming in from the federal government as a result of the COVID relief and various infrastructure bills and stuff. And so what happened was Missouri developed a nice surplus. And because the federal money was kind of filling some of these holes, well, what has happened is instead of putting that money in a rainy day fund or, something like that, well, some of that money did go towards expanding I-70, for example,
Sure.
Infrastructure investments, which
is a big project.
Which is a big project, and I think overall it's going to be good, even though it frustrates me every time I drive the highway.
I'm right at our office is right at the beginning of it, and I got to tell you, it's frustrating going from here to KC right now. But holy cow, 5 years from now, it's going to be pretty nice.
Yeah, I'm looking forward to it, but this middle time is not. It's not necessarily the best, but I feel
for the Wentzville folks right now with that S curve. They've been dealing with it for years. And so getting rid of that long-term will be fantastic for those folks.
Yeah.
But it'll be very, very painful for sure.
Yeah. So my family is from Boonville, so a little bit west of Columbia. And so there's a Roachport Bridge that they've been talking about working on that most of my life. And they finally did it. But the traffic from all of that was just an enormous thing. But just back to the original idea. So Missouri developed this nice surplus. At one point, it reached over $6 billion. So for the state that, in terms of general revenue, so that's basically our income and sales taxes, we bring in, let's say, $12 to $15 billion a year. If you think of that and then apply that to, Missouri had a $6 billion surplus.
Yeah.
But in the years since we developed that surplus, so that was about 2021, 2022, the state spending has been higher than what our revenues have brought in. So now we're expecting to be out of that surplus by next year. So we had extra money. We put some of it to good use, but not all of it. And our expenses got bigger than our revenues.
Yeah.
And now we have to make changes because the Constitution requires it.
Right. Well, but it gives you a little bit of a leeway. And that's what I think is interesting with these conversations. When you do have a little bit of that surplus, it gives you the ability to kind of hopefully take a step back, think a little bit more long-term, more big picture, and say, where does this really make sense for us to go for that long-term, right?
Yeah, and Missouri needed a lot of this investment in the roads. There have been plenty of studies showing Missouri had some of the most worst roads or most in need of investment. And there are plenty of areas like that. What the bigger issue is making long-term commitments with one-time money, which Missouri also sort of did. So infrastructure investments, that's something that can pay for itself over a long period of time, are good ideas. But whenever you start talking about government programs expanding with money that you don't have ongoing revenue for, that's something that the legislature is sort of dealing with right now.
Sure.
Because now we're back to the world where we don't have that extra federal money. And what is Missouri's revenue going to look like going forward?
Well, that seems like an issue on the federal side too, which we're not going to get into, but that very common things there. So, all right. So when we think about the income tax side of things, right? So we get also compared, you mentioned the Kansas analogy there, where a state that kind of failed with this kind of implementation and took a step backwards as a result of it, really. Then there's another example we get talked about quite a bit with comparison purposes. And I actually went to an event that was hosted at the Funny Bone, actually, with Kane from the WWF, and Eric Schmidt was there, and it was a great event. Eric came out with the Hulk Hogan theme song. It was awesome. Great event. And Tennessee is the state I'm talking about, and they are a state tax-free situation there. And they've said that it brought a lot of economic growth and prosperity to the region.
Yeah, when you look across the country and you look at the economic indicators, population growth, economic growth, all of those things, the states without income taxes are pretty much always at the top. And Tennessee is one of them. And the thing that is the most upsetting about Tennessee is if you go back 50 years, Missouri was doing better than Tennessee. Missouri was bigger than Tennessee. We were growing faster than Tennessee. And then it's really just gone downhill since. Missouri is now middle of the pack or bottom of the pack when it comes to economic growth, population growth. And Tennessee is one of the fastest growers. And when you look at some relatively recent data, Missouri is losing hundreds of millions of dollars every year to other states. Tennessee is gaining billions of dollars in income. So that's people.
Wow.
And that's
people and companies.
That's basically
right?
counting the income of people and where they're moving. And so the states like Florida, #1, Tennessee's up there, Texas is up there. The big losers, California, New York. I think there's a lot of concern about Washington. So really the big discussion of income tax in Missouri is looking across the country and saying, hey, we're tired of being middle of the pack, bottom of the pack. We're seeing where all the people are going, where all the states are going, because really, and sometimes people don't think about it like this, but in terms of states policy, like you really are kind of in a competition of other states of where people 100%. In business are going to be locating. And states all across around Missouri are lowering their income taxes. Tennessee doesn't have one. And so there's just so much data now showing where people are going, that tax policy is driving decisions, and it's time for Missouri to catch up. And at least the legislature's starting to kind of look there, even though it would have been nice to have started it a few years ago. But
of course. Well, fortunately, we have our neighbor in Illinois that is not on the list of potentially lowering their tax situation.
That is one thing that always helps Missouri in the comparison, especially of surrounding states, is we do have Illinois there.
Yeah. So, all right. So, you mentioned some of the states where people are kind of fleeing. There's some commonalities there. I hear a lot from those states of, that's a lot of that whole tax the wealthy kind of mentality. And I don't know if you can get onto that too much, because that's much more of a federal conversation. But what are your thoughts on that?
Well, I think states that are trying to tax the wealthy, they're seeing that people do move. So I mean, that is one of the big things that Show Me Institute, at least just economic research for not even decades, going back 100 years, is showing that people vote with their feet. So if you want to single out a group, if you want to pick winners and losers, if you want to tax people disproportionately, they're going to make decisions in other ways. So, I can't necessarily speak to exactly the policies the other states are doing, but it's very clear that people are moving from states that are taxing wealth, income. It's just a basic idea that if you tax something, you get less of it. So if you want to go tax wealth, people with wealth are going to leave.
Well, and you hit on a few different concepts there too, right? So first of all, no one likes paying taxes. Everyone wants somebody else to pay them, and they'll never point to the person who should, because that person will never pony up their money instead. No one wants to pay taxes, including that somebody that you're pointing to and thinking about in your head right now. So if that's the case, then eventually whoever you blame it on or whoever you put it to is going to end up wanting to do something different anyway. So that's the risk you always run, right? And I think that would apply on a federal level also. It just sets a scary precedent to me, because you also hit on another key point that we'll circle back to on that is you have to have that money has to come from somewhere. If it's a one-time deal, like they've talked about this wealth tax idea, right? You're funding it one time, but then your expenses continue to grow and grow and grow. And eventually, what do you have to do? You have to change the level of what you consider, in parentheses, that quote, wealthy number, right? You got to solve the real problem, which is staying fiscally responsible and in budget.
And that's something that all across the country, states have some difficulty with.
Of course.
Government always tends to grow. And whenever you start changing different tax policies and changing people's behaviors, it's a lot easier to go one direction than the other.
Right. Well, and as a free market thought process, which is what you guys are really known for, is that free market thought leadership types of things. That type of environment, really, economic growth is spurred by innovation, I assume, and probably not necessarily by taxation.
Right. You want people to be moving to your state, to your town. You want people to be investing. You want them to be locating their families, their businesses. And ultimately, if you're taxing income, if you're taxing wealth, you're taxing the things that you are trying to, really you should be incentivizing if you want growth. You are taxing those things, so you're getting less of it. That's why ultimately, pretty much all the economic research shows the best way to fund government, at least, is going to be through some sort of consumption-based tax, which is going to have the fewest disincentives.
Okay. So, because it's really what you're doing is you're incenting good behavior through economic development, growth, earnings, success, and you're paying for your government services by consumption. So spending more, right?
Yes.
And theoretically, those who spend more are going to therefore pay more as well.
Yes. And you see that all across the country. I think part of the discussion of the income tax is some people think of it as, a little bit of a free lunch. I don't have to pay as much because this guy over here is going to pay more, where the consumption feels a little bit like people may, it's not going to be spread out as evenly as they would want, or, that wealthier people are going to be paying more. But ultimately, when you look at the entire economy, people with more money do spend more, and consumption taxes do account for that. I mean, you do want to, you don't want to carve out a bunch of things from your consumption tax, because then that could sort of tilt it towards, one income group or something. But you can carve people or, different activities out of every type of tax, the income tax, property tax, sales tax, all those things.
Sure. So, all right. So if we're going to move, one of the things you always hear about with this, right, is everyone talks about how, you can't just get rid of the sales of income tax because it's going to get replaced with something, right? I think that's true, but you're also hinting at what it would kind of be replaced by. And if we have the ability to look at the 9 other states that have done this across the country, they do have a higher consumption tax, which is the sales use tax, right? That they do have that higher rate in their state.
Yeah. So I would say a couple of things about how you would go about replacing Missouri's income tax. So the first thing is, like we alluded to before, is that if you wanted to do it fiscally responsibly, you would do it over time.
Sure.
And so as you do something over time, that replacement can become easier as you grow, as a state grows more, income grows more, consumption grows more, as long as the government spending doesn't grow faster.
That's right.
Right.
Yeah.
So you can make some things easier that way. So it doesn't have to be, I think some people describe getting rid of the income tax for sales tax as a straight tax swap or something. That is not directly what is being considered in Jefferson City. That doesn't necessarily have to happen. I mean, of course, you could do a straight tax swap, but when you're talking about doing something over time, if you lower Missouri's income tax and you get faster growth, it can be easier if you do it in, say, 20 years. Trying to do it in 5 years, more difficult. So there's a lot of different levers at play is really all going into. But back to the sales tax idea, is that when you look all across the country, Missouri actually has one of the lower state sales taxes.
Right.
Now, Missourians that go to the mall or wherever to buy something right now, they don't necessarily feel like they're paying a low sales tax, because Missouri has the 12th lowest state sales tax, but once you combine it with local, Missouri has the 12th highest.
Oh, interesting.
State sales tax, or not state sales tax, the combined state and local sales tax.
Sure.
So the point being that the state's not actually collecting very much from the sales tax, but local governments over time have been putting more and more pressure on it. And Missouri has a very narrow sales tax base. So there's a ton of stuff carved out of it. We have a lot of what are called special taxing districts. So little shopping centers have an extra, 1% sales tax on things. There's a lot of different places.
It also makes it very
something
weird for the consumer. Very
weird,
difficult.
Very weird for the consumer. It's not even necessarily easy for the, for the businesses. I mean,
No.
Missouri has one of the most complicated sales tax systems in the country. And so one of the things, whenever the governor mentioned the idea of getting rid of the income tax, he talked about modernizing the state sales tax. And, some people hear that and say, oh, I'm going to pay more when I go to the store. Well, those are discussions that aren't even happening right now. But the big thing is realizing that Missouri's sales tax system is pretty messed up. It's pretty outdated.
Complicated.
It's complicated. It's not good for businesses. It's not good for consumers. Missouri consumers or businesses are at a disadvantage against digital. If you go to, the example I always use is if you go to Barnes and Noble and buy a book, you have to pay a sales tax. If I go buy a book for my Kindle, I'm not paying sales tax.
Right.
So that's incentivizing, people to buy things from Amazon,
Right.
versus your local business. And so that's something that needs to be addressed. And Missouri government hasn't done that. And there's just hundreds and hundreds of things on that realm. So it's a much bigger discussion, but it's something that I'm glad we're having.
Yeah. Well, and I don't want government to be complicated. I want government to be as simple as humanly possible. And that's why I was a big fan of the standard deduction being increased on a federal level. It made it just an easier tax situation because simple is usually better. The government's always going to be complicated. You can't please everybody. 50% are always going to hate you. 50% are going to love you. And all you're going to hear from everybody is the people that hate you. So you can't win. So it's better to just simplify where possible. And I think that's a great way to think about it too.
Yeah. And I think part of the discussion, or at least some things people have thrown out there with the current plan for getting rid of the income tax is, what if the state is trying to expand sales tax to services? So that would be... Now, there's not a discussion of, what services or anything like that. This is just a conceptual.
Well, I've heard about this. That's one of the things that people talk about is like CPA services. Now you're going to be paying us tax on that and all yada, yada, yada. Right?
Yeah. So there's so many discussions of what you would possibly expand the sales tax on services to that they're not there yet. But the point, at least from my perspective on, the modernizing the state sales tax system is if you're going to bring a whole host of other businesses into the state sales tax system, we got to make this thing a lot more simple for everyone.
Right.
I mean, it's way too difficult for people now. And it's at least a little bit easier in that right now you have a brick and mortar business where you're charging a sales tax. So it's the same all the time.
Right.
But if you expand it to services where people could be providing it at different locations, or if you're providing it virtually, things like that, it could just get so incredibly complex so fast.
Right.
So the state really needs to, get to that. And they haven't got to that discussion yet, but it is something long, long overdue.
Yeah. Well, and complicated for a business owner, folks, just in case you're not understanding this, complicated on a business owner is going to translate to a higher price for a consumer. It's just because if they have more complexity, they either have to pay for somebody to help monitor, manage it, or they have to do it themselves. Either way, it's likely to increase costs of goods.
Yeah, and that applies to every tax.
Absolutely.
People at least now are at least a little bit used to the income tax.
Sure.
Dealing with that. But if you bring in Missouri's crazy sales tax system, there'll be tons of businesses with a mess.
But you're saying it sounds like what we're trying to do is start small, do small progressions. Potentially that could look like, and we don't know, of course, so I'm just spitballing here, but not to put you on the spot, I'll kind of give an example of it. Right now you said we're down to 4.5.
4.7.
4.7.
Right. Yep.
Maybe, all right, so let's go. Next step might be 4.5 and maybe a slight uptick in the sales tax along the way. But what we wouldn't want to see is necessarily a big skyrocket of multiple percentages on sales tax prior to a significant reduction, right? You'd want to kind of offset for a consumer, I would think.
Yeah. And so one of the things that the current plan does is it says, okay, well, the only way the legislature can change the state sales tax is if they do that, whatever money they raise has to go towards lowering the income tax. So it can't be used to grow the government. But I do think there is an important thing to keep in mind here, which is that the government can also go, our elected officials can also go and, instead of looking at, because when you're talking about getting rid of the income tax, you're talking about basically a certain amount of money. Say before I used an example of 0.1% is like $200 million. Okay. If you just think of it like that, there's a lot of ways to come up with $200 million, but from the government standpoint. So Missouri has hundreds of sales tax exemptions. Missouri gives out $1 billion in economic development tax credits.
Sure.
There's $200 million the state could cut from its $54 billion budget. I mean, there's a lot of ways to get to different levels. It doesn't have to just be, raise the sales tax rate 0.1% or 0.5%. It doesn't have to be expand the sales tax to a different good or service. I mean, all those different things raise different amounts, and it's kind of a bigger calculation of what what Missouri would do or should do. But it's not something that, if we want to do this, it has to mean everyone is paying, 15% sales tax or something.
Right. Now, all of this has to be voted on by Missourians, but we're not there yet. This is not something that's on the ballots right now.
No. So last week, Missouri Senate had a public hearing on it. I don't know exactly how soon they will be debating it, but the legislative session ends in early May. So we would be figuring out relatively soon. And then if they do pass it, it's not exactly clear what time it'll be on the ballot or, when things would start. But ultimately, the question Missouri voters, if this passes, would be asked is, do you want the government to go on the path of getting rid of the income tax? And that would entail, asking the government to, figure out what is the right balance of taxes and how to pay for things. Sure.
So that's coming. We're not there yet. And I assume when it does come that time, Show Me Institute is going to be right there helping to educate, inform Missourians for sure.
Hey, we're trying our best. And I want to be clear, there are so many good questions people to have. This is the time. This is a big change. Missouri's been doing things the same way for a long time. And I'm so happy that there's a discussion of what to do with the state's tax policy, but it is certainly good to have questions about it. And there are certainly good things that I think about what is happening, but also there are tons of things that could be bad. So, everyone keep an eye on it because it is important. And, depending on what happens, hold your elected officials accountable because nothing is in stone.
Absolutely. Well, hey, thank you for sharing some time with us today. I really appreciate it. This is all really solid information. And we're going to have to keep a close eye on it in the future.
Hey, thank you very much for having me.
All right. Thanks once again to Elias and our friends at the Show Me Institute for coming up with policies and actions that can lead to better results for the state of Missouri. It affects all of us, and we have to think about these proactively and weigh out the pros and cons. As this issue comes up, sales tax and becoming a sales tax-free state, it's a big deal. There's a lot of levers and there's a lot of concerns out there, rightfully so. We don't want to, call 911 for services and all of a sudden be asked for our credit card number, right? That's not going to happen. That doesn't make sense. If we have a fire at the house, we want to make sure that there's going to be firemen there and they're going to be there to support our needs. We want infrastructure. We want safety. We want our dollars in Missouri to be spent well and wisely. And that takes place on a federal level too, of course. But you know what? Not a single person I've talked to thinks they pay less in taxes than they should. They might think somebody else should pay more. But when you go talk to that person, they don't say, hey, it's cool. I'm happy to fund the tax bill for everybody. No, that doesn't make sense. No one wants to pay more in taxes. So we have to have fiscal responsibility at the state level and at the federal level. We need to forward think about how we fund our taxes. Taxes today matter, sure, but taxes tomorrow can impact and influence not just us, but generations. And we want to have more control. It is important. So stay tuned to information from the Show Me Institute, because I guarantee you, as we continue to have more conversation about this with Missouri becoming potentially an income state tax-free situation, it is going to require a lot more education and a lot more thought by us as voters. We need to be educated. We need to be informed. We need to make sure we make good, strong decisions, because we will ultimately have to vote for it before we pay that price. And hopefully it's worth it in the long run. So hopefully you enjoyed this conversation. More importantly, think about your taxes in the future. 2025 is done. We are in 2026, solidly I might add. And we need to think about being proactive with tax planning as a part of our overall financial strategy. And if that's something you're not sure about how it affects you, it's simple. Just book some time on our calendar, have a quick and easy conversation about you and your goals. Hope you enjoyed the episode. Tune in every single Sunday, 9 a.m., Serenity Wealth Now socials, or on News Talk STL. Thanks for listening, guys. We'll see you next week.
Serenity Now! This is Serenity Wealth Now with Chris Cooper. Request a free copy of Chris's latest book, The New Holistic Retirement, by visiting SerenityWealthNow.com.
Investment advice offered through Fortis Capital Advisors.